Welcome to The Grasp. I'm Doug. When it comes to investment vehicles, there are lots to choose from, but which is the right one for you? Well, let's talk about it. When it comes to investment vehicles, there are lots to choose from. You have real estate, you have currencies, you have equities, you have cryptocurrency, you have hard assets, lots of different things, but each one has its own advantage and disadvantage.
All right, for the sake of argument, let's say that's true.
When we're talking about investment vehicles, the first thing that we have to ask ourselves is, what is the goal or purpose of this investment? Am I trying to protect myself? Am I trying to provide for retirement? All of these things we have to answer first.
Well, yeah.
But always remember that no asset is perfect, and so we have to make our assessment and weigh the risk versus the advantages. Let's start by looking at cash. And when we're talking about cash, we're talking about cash or its equivalents. So you may be talking about savings accounts or checking accounts, but these are all some cash-based system. Some of the advantages of cash is that, number one, it's in hand, it can be spent, it's liquid. Some of the disadvantages are it's a fiat currency, there's no yield, you have inflationary risk, and of course it is a depreciating asset. The next thing we'll talk about is money market securities, and when we're talking about those, we're talking about banker's acceptance or commercial paper or certificates of deposit or money market accounts. The advantages of these are they are somewhat liquid, you do provide some yield, and they protect your principal. Some of the disadvantages, they're fiat-based, they provide a low yield, and they are still a depreciating asset.
That was a ruse. They're not the best.
Another category would be bonds, and we're talking about treasury bills, or we're talking about corporate bonds, or government bonds, or municipal bonds. Some of the advantages of these are, in some cases, they're tax exempt, they provide some yield, and they may support your personal values. Some of the disadvantages, they're still a depreciating asset, the yield they provide is generally low, and there is a default risk.
And you're admitting that up front. You see where you've gone wrong?
The next category is probably the best known, and of course that's equities. When we're talking about equities, we're talking about common stock, preferred stock, mutual funds, ETFs, that type of thing. The advantages of these is they're very liquid markets, they provide a higher yield potential, and they offer the opportunity for passive income. Some of the disadvantages of equities are they are much more volatile, there's a potential for loss, and of course markets can be manipulated.
I'm sorry, what?
The next category are derivatives. And the derivatives, we're talking about options or futures. The advantages of derivatives are they are highly liquid markets, they have a much higher potential for return, leverage is available, and the risk is defined. The disadvantages of these, again, is that they're very volatile, the potential for loss is higher, and of course, these markets can be manipulated.
I've got it.
Another category we'll discuss is another well-known or popular one, and that's real estate. And when we're talking about real estate, we're talking about residential real estate or commercial real estate or REITs, which are real estate investment trusts. Some of the advantages of these are they still give a good potential return, they are generally less volatile, they can be leveraged, there are tax advantages, and they can provide passive income. The downside to real estate is that it's not liquid, it requires input, and of course there's always market risk involved.
Fine.
Another category are contribution assets, and these are pensions or annuities. Some of the advantages of these are they provide a good yield potential, and there are some tax advantages. The downside, of course, are that they are not liquid and there is a risk of default.
Whoa.
Well, what about cryptocurrencies?
All right, I'll tell you.
Cryptocurrencies were invented to eliminate risks that were intrinsic to the other asset classes. First of all, they're not fiat. They offer an excellent yield potential. They are liquid and portable and decentralized, but they also have their disadvantages. Number one, that they are very volatile. Number two, there is regulatory risk, and they are unfamiliar to a lot of people.
You need to forget about all the normal rules that apply to both college and society, because this is a very big idea, my friends. We are talking about a non-exclusive, egalitarian brotherhood where community status and, more importantly, age have no bearing whatsoever.
Of course, this is just a broad overview of the asset classes and their advantages and disadvantages. For more detailed information, look at some of our other videos where we dive deeper into each one of these things to talk about them further. As always, this is not financial advice. Do your own research.
Well, technically, that doesn't matter. They found a loophole.
A loophole?
Yes. Well, it's interesting, sir. As stupid as they appear, they're actually very good at paperwork.
That's it for today. As always, leave comments below if you have questions. Ask them and we'll answer them as quickly as we can. And we'll see you back here on The Grasp.